Good afternoon, one and all. I, CA Saurabh Ajmera, welcome you all in this webinar on overview of emerging compliances and regulations. Before we begin, I request everyone please place their hand on heart for ICI motto song.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Friends, let me first welcome both the speaker of this program, CA Vipul Kothari sir and Mr. Prasad Bhonde sir. Friends, we have presence of dynamic chairman of WRC, CA Arpit Kabraji with us. Welcome, sir. We also have presence of immediate past chairman, CA Murtuza Kachwalaji in this program, and my council colleague and treasurer, Ketan Sayyaji with us. Welcome, sir, in this program. Friends, we at WRC in this year doing a lot of initiative, and in this series, we also launch our Niryat series, in which we are catering almost all 47 countries where we have ICI presence, and we will discuss about the compliances and the requirement and opportunities over there for our members, so we can empower all our members through knowledge sharing and networking from these programs. With this, now I request Chairman of WRC, CA Arpit Kabra, for his welcome address.
Thank you, Saurabh. Warm evening and welcome everyone. I say warm because it's terribly hot here in Mumbai, and wherever you are, I'm sure these sessions like these would just make you stop wherever you are, listen, sit back, relax, and enjoy the opportunities that are coming in next. So enjoy these sessions today. Corporate tax, UAE, Doha, Middle East is like a buzzword now. Everything that we talk about, every opportunity that we're looking about, there's a lot of happening around this entire ecosystem at Dubai, UAE, Abu Dhabi, and Doha. In that series, I think I must really congratulate Saurabh and Murtuza and Ketan to have thought of a very important project called as Niryat series. Niryat is export. How can we export our services? And essentially, therefore, what we've done is we have reached out to speakers from across, not only in India, but offshore, and have requested them to, if they could do some sessions. And therefore, I must really thank Murtuza Bhai here to reach out to Vipul Bhai. Vipul Bhai is essentially from WRC, from Ahmedabad, and he's now in Dubai. And, he's set up his entire practice there in Dubai. So I think when you want to explore these scenario at UAE or outside, when you have someone who's practicing there, I think that becomes so relevant. In the same space, what we are trying to do is tomorrow we are having a program on Gift City. When we talk about emerging opportunities, no one can ignore this space called as Gift City. We're having a wonderful event tomorrow here at BKC. So people who are interested may do join us here. We are also unveiling a book on Gift City. This book shall be available to all our members of WRC. Believe me, members who are registered and paid membership at WRC, they would be eligible to get this publication. So make sure that you have, this is the time when we are, the membership fees and everything has been paid. and more importantly, you are all registered as WIRC, so that we could share these publications, important publications, timely publications with each one of you. Just to ensure if there are young chartered accountants who have joined us here, 27th May, we are having a convocation function at Geo World Convention at Bandra, BKC. So people who are due for their convocation may reach out to us, and they may ensure that they get their participation in this convocation event on 27th. This is our WIRC Niryat series. Very importantly, I must say, whatever that we do now, whatever that we are making, we have interacted with Maharera, for example. We are interacted with so many other regulators, and we are meeting various stakeholders. One thing that comes up is, we chartered accountants have been really on toes. We have really been working very hard, and we have been really contributing in every space that we can. I think that is the entire spirit, and therefore we are celebrating that spirit this year with the Pride moment. We will be entering into the 75th year, and Pride is what we are celebrating as WIRC. P is perform, R is relearn, I is innovate. Innovation is centric to everything, and D is distinguish, E is enrich. With this pride, I welcome one and all in this wonderful session. Over to you, Saurabh. Thank you.
Thank you, Chairman Sir, for wonderful address and knowing us about all the activities of WIRC. Friends, we are also doing activities for the members in industry, and we are launching our Gurukul project very soon, where we will train all the members, those are working in members in industry. Apart from that, as Arpit Bhai is also mentioned, that this year will be known as innovative year for our WIRC. We are doing a lot of technological innovation, and all will be updated to all of you. Now I request immediate past chairman CA Murtuza Kachwala to introduce faculty of our session. CA Vipul Kothari, sir.
Thank you, Saurabh. Good afternoon to everyone. Let me first welcome both the speakers, CA Vipul Kothari and Mr. Prasad Bhonde. They are both at UAE. They're doing tremendous work there, and they've agreed to share their tremendous amount of knowledge with us today. So I welcome both of them. Let me also thank Munish. Munish has been in touch with us for a long time, and he is the architect. He's been chasing us, and he's been instrumental in organizing this program. So Munish, thank you for this. And we have more than 250 registrations, so I'm sure people will immensely benefit from this. Before I go on to welcome Vipul Bhai, let me also thank the dynamic chairman Arpit Kabra for all the new innovation and different type of work and adoption of AI technology, and also the secretary Saurabh and treasurer Ketan Bhai for the excellent work, excellent, humongous amount of work which is being done. And like chairman mentioned, today this UAE program, tomorrow on Gift City, so many opportunities are there, and at least WIRC is taking all the efforts to bring the opportunities to people so that we can understand, know, and then pick up whatever is of interest to us. So today Vipul Bhai is going to cover on the compliances and regulations in UAE, and which means, like, as a practicing chartered accountant, we can also go and provide those services, and he will touch upon that as well. And then Prasad ji is going to touch upon how to register and set up an organization entity there. So any of our clients who wants to go to UAE and set up practice, I think they can support us in everything. So with that, now let me do take the pleasure of introducing Vipul Bhai. Vipul Kothari is managing partner of Kothari Auditors and Accountants. By qualification is Bachelor of Commerce from Gujarat University, is Master of Business Administration Finance. He is a fellow chartered accountant. He cleared in 1987, and he is also trust and estate practitioner from 2016 onwards. He founded Kothari Auditors and Accountants in UAE in 1992 and Global Business Services DMCC in 2010. Presently Director of Global Business Services DMCC as well as Managing Partner of Kothari Auditors and Associate. He is specialized in guidance and assistance for formation of global entities trust, and foundation in various jurisdictions across the world and is leading practitioner in this field. He is an expert in audit, accounting, corporate services, and related advisory services. The firm Kothari Auditors is registered in UAE, Ministry of Economy and Commerce, having offices in Dubai and Sharjah. And the firm excels in offering accounting, audit services, and host of consulting services. And Global Business Services, an associate of Kothari Auditors and Associates, dedicated to providing advisory on corporate formation, legal structuring, and assistance for formation of companies in various jurisdictions. So, friends, we have an expert in Vipul Bhai. He spent more than 2 decades, I will say, in UAE doing this work. And today he's going to share his experiences and talk a lot of stories and case studies from his life. So with that, welcome to you, Vipul Bhai, and thank you very much for joining us here today.
Over to you, sir.
Thank you, Murtaza Bhai, for your kind words of introduction. Good afternoon to all my CA colleagues and friends from the profession. First of all, I would like to thank CA Arpitji Kabra, Chairman of WIRC, CA Murtazaji Kachwala, immediate past Chairman, of course, the Saurabhji Ajmera, Secretary, Ketanji Sayya, Treasurer, and the entire team of WIRC for giving me and my colleague the opportunity to share our knowledge and experience with you. I'm sure, I think, in the next 50 to 55 minutes, I will try to give a flavor of what the compliances and regulations in UAE and what has been in recently, emerging in the last few years, the changes which have come in. Let me just share the screen. 1 minute. Yeah. I hope you can see the screen.
Yes, sir. Yes.
Thank you. So as all of you are aware, and many of you are aware that UAE is a place which is highly developed and is a commercial and a business hub. But UAE, since the date of its formation, which was 50 years, the country is just 50 years young. Since those days, UAE had always adopted a policy of laissez-faire, which we had learned in our colleges and schools, where, government, minimal interference by the government on the businesses. However, they still regulated. And because of those policies, open trade, open skies, where there were no restrictions on things being imported or quotas or duty structures, because of that, UAE became a commercial and a business hub and a tourism hub that you see today. Over so many years, UAE has also tried to become a financial hub. But one of the issues which was hampering probably recognition of UAE as a financial hub was because there were hardly any corporate compliances and regulations in place. There were no tax laws, or there were no direct or indirect taxes in UAE, except for, of course, custom duty. Other than that, there were no taxes. Because of that, it was being perceived as a tax haven. And that's when the leadership of this country started thinking in a direction that how we can make it, this particular country, best financial center in the region. And it all began in 2014, when UAE became part of the OECD, which is Organization for Economic Cooperation and Development. It became a member of the Development Assistance Committee. And the objective of OECD, apart from ensuring that the economies collaborate to develop policy standards to promote sustainable economic growth, one of the focus area is in ensuring that harmful tax practices are not prevalent in jurisdictions across the world, and it does not impact businesses or does not mean that profits get shifted or investment gets shifted to low tax or zero tax jurisdictions. And that's when things started happening. And in 2017, UAE signed multilateral treaty against offshore tax evasion and avoidance. And following that, obviously, there were many tax information exchange agreements which were signed, many double tax avoidance agreements which were signed. But the real change which started happening was in 2017 onwards, when excise tax was first introduced, then in 18, value-added tax was introduced. And then there were a host of other regulations which came in the year 2019 till 2023, with one of which was economic substance regulation, ultimate beneficial owner regulation, and of course corporate tax, which is being now introduced effective from June 23. So this is the background of where and how UAE has progressed. What I wish to do in the next another 45-50 minutes is give you a broad overview of different compliances which are applicable and which will impact the businesses or professions in UAE. And from that, we as chartered accountants can see what are the opportunities available for the Indian chartered accountant fraternity in UAE, which is quite good, and the scope is widening. Let me just briefly touch upon the company regulations. Generally, in any country, you have one Companies Act, which is prevalent across the entire length and breadth of the country, and under which generally the companies are being formed and, single window or agency. However, in UAE, there are multiple agencies which can license and register the companies. And I've just tried to highlight these three aspects, three entities or three jurisdictions where you can really set up. One is mainland, which is non-free zone. This is being done by the various economic development departments, and there is a commercial company law for incorporated entities. However, if you set up an unincorporated entity, like proprietorships or general partnerships, those are governed by the local or the state laws. Then there are very many free zones which are there. Each free zone has its own regulation and decree and follows the implementing guidelines which are being set by those free zones. And the third is the offshore. There are various offshore authorities or international company authorities which generally guide the setting up of companies. So, you can have different type of companies depending on what are your client's requirements. Based on that, one can decide whether to set up in mainland or free zone or offshore. So these are the type of companies which I'll not go into. I mean, we are all aware of it generally, and these are standard which are generally applicable everywhere. Just one thing I wish to highlight, that anyone who wants to set up any business here, they need to set up not just the company, which could be proprietorship, partnership, limited company, public, private, joint stock or free zone companies, but simultaneously, they also need to obtain a license for the activity that they are proposing to carry out. So it has to be a specific activity and not a very wide object clause, which generally we see in many of the memorandum of association, which is, you can call it from pin to plane, everything they could do. Here, specific activities, you need to obtain license, and that is what is mentioned in the memorandum. That's on. I'm not touching upon the company law, but would like to touch upon the tax and relevant compliances which have come in. So the first tax law, indirect tax, apart from the custom duty, the first indirect tax which got implemented was excise tax, which came in the year 2017. Now, as we understand it in India, excise tax is on manufactured goods, but in UAE, it's not on manufactured goods. It's on certain specific products, whether it is manufactured or whether it is imported and traded in UAE, does not matter. It is on a product, specific product. And these are the 6 product categories, mainly tobacco and tobacco products, liquids which are used in electronic smoking devices and tools, electronic smoking devices and tools, carbonated drinks, energy drinks, and sweetened drinks. So sometimes, some people also call it a sin tax, that, this is something which they do not wish these products to actually be more marketed, and that's why they are levying more taxes on that. And the rates are very standard, 50% on carbonated and sweetened drinks and 100% on all the remaining 4 categories of products. So again, very simple. And as UAE believes in keeping things simple, generally all these tax laws, whether you call it VAT or whether corporate tax, are generally very simple and not too much of complication to implement. The next one which got introduced in UAE was value-added tax. This came into effect in the year 2018, effective from January 2018. And VAT is modeled largely on the European Union VAT regulations. The standard rate, what is applicable is 5% on majority of goods and services, except few which I'll cover in the next slide, which are either exempt or zero rated. And there is a mandatory registration threshold that if you exceed 375,000 revenue during a 12-month period, then you are required to register. And then of course you need to charge VAT and collect it and then pay to the authority. One good thing about the UAE VAT regulation is in VAT regulation, tax grouping has been permitted. That would mean that companies which are under common control or ownership can apply for tax grouping, VAT grouping, and they file it as a VAT return as a group, which would mean that any transactions between the group companies would remain out of the purview of the VAT. UAE, as you know, is an international business center, and there are many free zones from which businesses operate and they do business internationally, and maybe they are not serving customers or clients in UAE. For making sure that these companies are not at a disadvantage by paying extra VAT percentage and goes as a cost, or customers have to pay more, these free zones have been identified as designated free zones, and entities which are registered are exempt from VAT, of course, provided they do international trading of goods. Import of services or goods is considered on reverse charge, but it is merely a book entry. So there's no cash flow impact. In the same period, whenever you import, you pass an input to VAT on reverse charge and you show it as an output VAT also. So primarily it just gets a set off. Any tourist which buys goods from UAE at the exit at airport, they are permitted refunds on electronics, on jewelry and those products. And the filing is generally quarterly or monthly, depending on the turnover. Again, very simplified filing requirements, not a very complicated one. There are certain entities which are exempted, of course, government entities, charity establishment, or international event hosting entities, and of course, certain citizens and farmers, fishermen, which generally for foreigners will not be applicable in these, any of these will not be exempted foreign. The VAT rates which are applicable are primarily three categories. One which is exempt, so residential real estate, which is either sold or leased up to 3 years primarily, that would be exempt. Local passenger transport, financial services, which would include the interest, not the fees and charges by the banking sector. And supply of bad land. These are exempt, meaning these do not need to be even reported. And of course, input VAT on generating this income will not be able to be claimed also. Then there is second category, which is zero rated, which is 0%. So any exports from UAE to overseas. Now implementing states, because entire VAT has been agreed upon by all the Middle East Gulf Cooperation Council countries, which include Saudi Arabia, Qatar, Oman, Bahrain, and Kuwait. However, there has been no agreement yet to the effect of common implementation. So right now, any exports from UAE is entitled for 0% VAT. National and international passenger transport, investment grade precious metals, which would mean that gold or silver or any such precious metals of investment grade purity, will be 0% VAT. Oil and gas, preventive and basic healthcare education, and for supply of residential building within 3 years is considered as zero, because so that anyone who constructs building and then sells it, it would be zero rated for the first sale within 3 years, so that they can claim input VAT. And the remaining all products other than which are covered under exempt and zero will go into the standard rated. So, including commercial real estate, exports to, other implementing states, which is currently not applicable. So there are no challenges as far as classification, whether 5% should be applied or zero or exempt. Another regulation which came in the year 2019 is economic substance regulation. And it was always being perceived that UAE is being used, or entities in UAE are being used as a pass-through entities just to park profits. And with that, curbing that particular practice, if it was existing, and ensuring that harmful tax practices are not being adopted by UAE companies, government brought in economic substance regulation. Now, as I mentioned that, the genesis or the start of this was that, profits were being shifted from high tax to low tax jurisdiction. And then in that low tax jurisdiction, there were no or minimal activities. And this was again, OECD was the force behind ensuring that, this is also being implemented by different countries which have low taxes. And that's a part of their project called Base Erosion and Profit Shifting, BEPS project. Now, what the UAE economic substance regulation says, what it says primarily is that any activity which is being carried out, and they've defined what are the activities which are being covered. So those activities which are being carried out in UAE, the companies which carry out should ensure that they have enough of economic substance in UAE. Now, what are the activities which are being covered under the economic substance? Those are titled as relevant activities. So as you can see here, relevant activities primarily comprises of banking. So if companies which are carrying out banking activities, investments, insurance, investment fund management, lease or finance, so which would include, the non-banking financial companies which are into lending, shipping, intellectual property rights, distribution and service centers, and holding company or headquarter business. Now, banking, insurance, are one category of companies, but generally for small and mid-sized entities, they would generally fall into distribution and service center businesses. What distribution and service center means that if a UAE-based company is buying from its group company based overseas and then selling goods anywhere, or UAE-based companies rendering service to a foreign group company, they would all be covered under distribution and service center. That would mean that companies which carry out these activities will have to ensure they have proper economic substance in UAE, and the activities are being carried out in UAE. And this has to be proven by way of 3 tests which have to be carried out. The 3 tests which are applicable to prove that substances, there is one directed and managed test, which would mean that one, the top management and the decisions which are being taken at the policy level are being taken in UAE, meaning board meetings and decisions are happening in UAE. And the key management or the key management personnel who manage the day-to-day affairs of the business are also based in UAE, and they carry out their operations from UAE. Second test is core income generating activity test, which would mean that every activity that is carried out, for example, if it's a distribution, meaning you are buying goods from your group company overseas and selling it in any market, generally the core income generating activity will be placing of orders, arranging logistics, taking care of the inventories, taking the risk on your supply side and the customer risk, arranging for financing of those. So, these are generally the core income generating activities, and these have to be also carried out in UAE. And the third test is adequacy test, which again covers that every company which carries out any of these activities need to have adequate office space, adequate number of employees, adequate operational expenditure. So, and of course, adequate assets to carry out these businesses. So this means that any company which carries out any just of these activities for the purpose of parking profits in UAE without substance will not be able to do, because under the economic substance regulation, a notification has to be filed that you are carrying out economic such relevant activity or not within 6 months, and you have to then file a detailed report detailing that you have fulfilled the required test conditions and you have successfully been able to carry out and show substance in UAE. And if you do not, if that company does not fulfill the substance test, there are severe penalties which are applicable, which could range from not just 10,000 dirhams, which are admin penalties, it could go up to 400,000 dirhams, and even termination of the company licenses, meaning that company can no longer carry out business. And one more penalty which could also happen is sharing of information about this company with the home country where the beneficial owners are resident of, or where the parent entity is based in. So this would deter a lot of companies which probably would want to just set up for the sake of doing shifting of profits. The another regulation which came in 2020 was ultimate beneficial owner regulation. Earlier, there was no need to disclose who the ultimate beneficial owner was, because the name of the shareholders and directors were, of course, name of the shareholder directors were reported to the authorities. But it was happening that sometimes the shareholder is person X, but actual beneficial owner is person Y. Or there is a corporate structure where there are multi-level companies, and at the end, behind that company at the parent level, who is there, no one was aware of. So in order to ensure that that transparency is there, UAE came out with this ultimate beneficial owner regulation. The objectives were two: to ensure, one, that anti-money laundering is fulfilled, and there is no money laundering activity being carried out, and the actual beneficial owner is identified so that in his country of residence, he fulfills the required tax compliances and reports to the authorities what is required to be reported. And if that does not happen, always under the automatic reporting agreements and common reporting standards, the information can be shared by UAE authorities with the Indian authorities or the home country, whichever it may be. Now, who the UBO is, and there you have to identify that it could be, ultimately it has to be a natural person who owns 25%, minimum 25% of the company, either through shareholding, directly, indirectly, or through control of the management. So it's a very wide definition: direct, indirect, control, ownership, management, everything comes into play here. And 25% or more shareholding will get reported as ultimate beneficial owner. However, if no natural person satisfies this condition, because there could be, let's say, a trust structure at the top or something, then in that case, who is the person who controls the company through whatever means will be deemed as a UBO. And if those are not fulfilled, then the senior management of the company will be deemed as the ultimate beneficial owner. And the company is required to maintain the ultimate beneficial owner registers, shareholders and partners registers. And if there are any nominee directors, those also need to be maintained, as well as updated on regular basis. Anti-money laundering regulation has been tightened, whereby UAE has already established a financial intelligence unit within the UAE Central Bank, and that maintains the database, and it also facilitates the authorities for their investigation in case of any AML related violations. And one more thing that is also covered is that in case there is a tax evasion also happening for where UAE entity is involved and the UBO is probably setting up an entity just for tax evasion purpose, that also would indirectly get covered under the anti-money laundering provisions. And the fines and penalties are very heavy. It could go up to 5 million dirham, and also there could be criminal penalties also applicable. Compliances, there are reporting requirements. All stakeholders are required to be checked, verified for their screening and all that, for sanctions list, due diligence. If it is a politically exposed person, then enhanced due diligence, and sanctioned persons also enhanced due diligence is required, and proper KYC documents have to be obtained. And what activities they are carrying out is also required to be reviewed on a regular basis. And in this, even the auditors, consultants, and corporate service provider like company formation agents, jewelers, real estate agents, these are also covered directly by way of specialized reporting requirement, which has been implemented in UAE. So any transactions which customers above certain amount needs to be reported, like for jewelers, anything above 55,000 dirhams needs to be reported on the authorities portal, and the transaction documents and compliance documents have to be uploaded. And in case there are any suspicious transactions or activities that the intermediaries like auditors, lawyers, or others come across, they'll have to flag it off to the government department through a portal without in fact informing the client. And of course, depending on the severity, you have to discontinue the relationship with those stakeholders. As many of you would be aware of, there is a FATCA and CRS, which is Foreign Account Tax Compliance, which is a US-based, and Common Reporting Standards, which is by OECD, and of course non-OECD also have adopted and implemented. That is already accepted by UAE, and it is already in place where banks and authorities require this reporting to be done. And once this forms and details are filed, the authorities are aware that what is the tax residency of the ultimate beneficial owner or the shareholders directors, and based on that, the information can get shared with the authorities of the home country tax authority. So UAE is one of the signatories, and it has already implemented this, and it is very much active and in place. One issue which was there in UAE for a long time was that it was easy to start business but difficult to close down the business, and especially in cases where company goes bust or goes bankrupt. There were no proper bankruptcy law. However, UAE has brought in bankruptcy law, whereby they have defined the framework on how a company, either which is not able to fulfill its financial obligations, either it can be restructured and revived. If not, then it goes for bankruptcy. And then if bankruptcy, then they will appoint the liquidator to take over and then do the proceedings and settle the liabilities. So there is a framework in place. There are processes already in place, and already some cases have gone through this particular bankruptcy law. However, it's very, it has come in only in the last few years. So this is still evolving, this particular law. But one good thing which has happened was, in UAE, check return or check bouncing was considered a criminal offense, which after this particular law has come, there have been some other amendments and regulations which have come in, whereby check return. So if a person has issued a check and that gets bounced, it is not considered a criminal offense. So person cannot be just caught by the police and put behind bars, but civil proceedings can be carried out based on the bounce check. So which is one good relief probably for genuine businesses who face genuine financial problems and difficulties. So now I come to the main topic of corporate tax. As every one of you may be aware of, UAE, after many years of its existence, has decided to now implement corporate tax. And effective from 1st of June 2023, so the financial year which starts from 1st June 2023, the corporate tax is going to be implemented. Now, who all are covered under the corporate tax? So it is a corporate tax, one thing, not a personal business income tax. So personal income tax is not being introduced, but corporate tax. However, there are some activities carried out by an individual which will be covered as a part of business activity under the corporate tax. So all who would be covered would be as a resident taxable person, juridical person. So any companies which are registered in UAE, whether it is in free zones, offshores, or mainland, they will be covered. Foreign entities which are managed and controlled in UAE. So if anyone based in UAE has, for example, a company in Mauritius, and the shareholder directors are residing in UAE and they are managing it from UAE, they will also get covered as a resident taxable person. And of course, natural persons, as I mentioned, who carries out business or business activity in UAE will be considered as resident taxable person. This definition of business activity by natural person is not yet defined by the authorities. That clarification is awaited. And another set of taxable person is non-residents. So any person which is basically not resident, but has either permanent establishment or derives UAE sourced income or has nexus in UAE. Again, nexus is yet to be defined. These are going to be a taxable person. There is one, like in India also, as we have here also, in unincorporated partnerships will be considered as tax transparent, meaning the entity will not be taxed, but the partners in their personal capacity will be liable to tax on their share of income and expense profits of that. There are certain exemptions granted to some of the entities, as one can understand, government, federal or emirate government or government controlled entities, or persons, meaning entities or individuals engaged in extractive business or non-extractive business of natural resources in UAE, because extractive meaning oil or any such extractive, non-extractive business is natural resource business, are being taxed by the individual states or emirates, which is either Abu Dhabi or Dubai or Sharjah, they tax. So they are being granted exemption because so that there's no double taxation happening. There are certain qualifying public entities, benefit entities, which are exempt. Investment funds also are exempt. And of course, private or public regulated social security pension funds. And these are also not required to register like government entities, government controlled or persons engaged in extractive, non-extractive business, or non-resident, which derives only state sourced income, but does not have permanent establishment. They don't need to register. There are free zones, as many of you are aware of. Now, whether companies operating in free zone will be entitled to a special treatment. Yes, UAE corporate tax has given a special treatment. However, there are conditions which needs to be fulfilled. One, that particular free zone should be covered under the law saying that, yes, they have granted tax holidays. And the free zone company, which is based in that approved free zone, will have to maintain adequate substance in UAE. So this would mean that they need to have proper office, manpower, and team to handle the business from UAE, and not that it's just a paper company operating in as a virtual company or a shared workspace company. Such entities or free zone person should derive qualifying income. Now, qualifying income is yet to be defined. However, the general belief and perception is that qualifying income will be what businesses that you do internationally, meaning if you sell goods internationally or maybe render services internationally or within that same free zone, possibly could fall as a qualifying income, and it could get preferential tax treatment. Such free zone entities which want to claim this benefit will have to comply with the arm's length transaction and transfer pricing documentation, and of course any other conditions that will be prescribed. So the companies which fulfill these conditions, they have an option that they can opt for either a normal tax regime of 9%, or they can opt for this regime which says that on qualifying income you pay on 0% tax, and on other than qualifying income you pay 9%. One good concept which has been brought in the UAE corporate tax is tax grouping for corporate tax purpose also. Of course, this tax grouping is little different than the tax grouping under VAT that I mentioned. There it is common control and management. Here in corporate tax, the tax grouping is based on the parent subsidiary relationship. That would mean that if the parent company owns at least 95% of the subsidiaries, either shares, voting rights, and entitled to 95% of profits and net assets. So it is not either or, but it is, and all of these conditions have to be fulfilled in order to qualify for grouping. And UAE branches of companies within tax group also will be included. However, certain entities which are either exempt person or which are qualifying free zone person, these will not be able to come as a part of tax group. The conditions which have to be fulfilled are all the group companies should have same financial year and they should follow the same accounting standard, meaning UAE generally follows international financial reporting standards, so they should follow IFRS. The advantage of tax grouping would be specifically from two perspectives. One, if there are companies which are making consistent losses and they're expected to make consistent losses, then making a tax group is more advisable because you are able to offset the losses of one company against the profits of the other company. So your effective tax rate does not just go up because where profits are there you pay and where losses are there if you don't get a set off. And second thing is, as far as transfer pricing, if there are group company transactions between companies which are in the tax group, you don't need to worry about the transfer pricing regulations and maintaining the transfer pricing documentation. In order to give relief to the small businesses, because there are a lot of small and medium-sized businesses, and there are ultra small businesses also which are operating in UAE, and for compliance purpose to expect them to even maintain accounting records sometimes could be a challenge. So for a period of 2.5 years, or technically 3 tax periods, there is a possibility that these small companies can claim small business relief. The conditions are that it should be a taxable person, resident taxable person, and revenue, which is the top line, should not exceed 3 million dirham for every tax period, and they should not be either a free zone, qualifying free zone person or part of the multinational enterprise group, MNE group. Multinational enterprise group is which has presence in multiple countries and where the group revenue is more than 3.1 million dirham, so which is around euro 750 million. So 3.1 billion, 3,150,000 dirhams. Now, this period for which this is applicable is any period for tax period starting on or after 1st June 23, when the tax law comes into effect, till any financial period which ends on or before December 26. And revenue, of course, will be based on the applicable standards. And of course, if a company claims the small business relief, they will not have certain exemptions or deductions or carry forward of losses that would not be allowed. Now, how is taxation going to be charged? So again, as we saw, resident and non-resident. So in case of resident juridical persons, it would be on worldwide income. On natural person, worldwide income, which is derived from business activities which are carried out in UAE. However, if it is non-residents, only the taxable income from their establishment in UAE, or income which is sourced in UAE, or income which is attributable to non-residents' nexus in UAE. The corporate tax law has given exemption for certain categories of income which will not be liable to tax. Now, these are primarily dividends or profit distributions received from resident entities. So meaning, any UAE-based entity receives dividend from another UAE-based entity, then that would not be taxable, or it would be considered as an exempt. Then for foreign entities, if dividend or profit distributions are received by UAE entity from a foreign company where they have shares, it is exempt subject to fulfilling the participating interest conditions. Now, what participating interest condition says is that the shareholding should be at least 5%. You should have a right to receive 5% dividend or share of profit, and you should have the intention to hold this shares for 12 months or more. So at least you should have the intention. And if you sell it earlier and you have claimed exemption, then you have to obviously write back and offer that amount to tax authority for corporate tax. Other income from participating interest, meaning if there is a capital gain on sale of shares, whether it is from a UAE-based entity or from sale of shares of a foreign company, participating interest condition would be applicable, meaning only if you hold 5% or more shares and you have held it or you have held it for 12 months or more, then only you will be entitled to exemption. Income of foreign permanent establishment, of course, there are certain conditions. And income derived by non-residents from operating aircraft and ships in international transportation. So this would be more for the airlines or shipping companies which carries out businesses in international transportation. Now, UAE corporate taxes tried to keep things simple on deductions of what is permitted and what is not permitted. And there are hardly very few deductible, I mean, sort of, you can say non-deductible expenditure. Of course, I'll just cover the deductible part first. So what is deductible is primarily your expenses which you incur for the taxable person's business, and that should be not capital in nature. So mainly revenue expenses and business expenditure which are incurred to generate non-exempt. So if you spend money on generating exempt income, that is not permitted, it would be non-deductible. Interest expenditure is also permitted, net interest expenditure. However, there is a cap of 30% of EBITDA. So what the law says is that the net interest, which is your interest expense minus income, whatever is a net interest expenditure, that can be claimed up to 30% of EBITDA, earnings before interest, tax and depreciation or amortization. And the disallowed amount can be carried forward and it can be deducted in 10 subsequent tax years. However, there is one cap that they are going to bring in, that if the interest amount is less than this threshold, then this cap of 30% will not be applicable. So that specified limit is yet to be announced by the authority, so that small and mid-sized entities, most probably which has less or low amount of interest, might be able to claim full amount of interest as deductible. Entertainment expenses of any nature are allowed only up to 50% and not up 100%. And then if you have payments to connected persons, only the deductible component will be to the extent of payment that benefits to the corresponding market value that is provided. So let's say if a director is a shareholder, is a director, and he provides service, he is drawing remuneration. His remuneration will have to be at market linked rates or similar rates which are applicable in similar businesses. Only that much would be allowed as deductible. Balance will not be allowed as deductible. Then there are certain other non-deductible expenditure, which are donations, grants, fines and penalties, other than, of course, for damages of breach of contract, illicit payments, dividend profit distributions, drawings, input tax under VAT. If they are recoverable and you don't claim it, you cannot claim it under corporate tax also. And tax imposed on income outside UAE. These are not deductible from the income. The tax rate applicable is progressive rates of tax, which would mean up to 375,000 dirhams of annual income, net profit, net taxable profit will be taxed at 0%, and any income above 375,000 will be taxed at 9%. However, UAE is a signatory to BEPS Pillar 2, and under that, UAE has already agreed on differential tax rate for large multinationals, which has turnover of more than 3 billion dirhams or euro 750 million. This has not been implemented. At a future date and time is when authorities have said they'll implement it. Now, sometimes, the companies in UAE might be operating globally, so they might have paid tax overseas in international markets. Can they claim tax credit of those? Yes. If they have paid foreign tax, they can claim credit of that in foreign country, which has to be lower of either tax paid or the tax liability in UAE, whichever is lower, that much. So excess tax, if it is paid in foreign country, will not be refunded or it will not be carried forward. And free zones, as we already saw earlier, has a differential regime for taxability, which is on qualifying income 0% and other than qualifying 9%. Taxable income, very simple. I mean, again, I'm not going to go much into detail, but you start with your accounting profit. Then there are adjustments of exempt income, deductible, non-deductible expenditure, set off, carry forward of losses and all those things. And then you come at the taxable profit or income, and then on that apply the minimum threshold of 375, and on that 375 zero. And as you can see in this illustration, more than 375, you pay 9%. Another interesting provision which has been brought in is that in case there are losses which are there of an entity which they incur, you can carry it forward and set off in future for any number of years. So there is no limitation of time on carrying forward and set off of losses. Only limitation is that in the subsequent years, only 75% of taxable income can be used to set off the loss. You can't use 100% of taxable income to set off the loss. And there is also a provision for transfer of tax loss, where the loss can be transferred to another company in the group. So again, it is not a tax group, but maybe same shareholder, for example, owns two different companies where he holds 75% or more. Then loss of one company can be transferred to the other company subject to fulfillment of conditions. This is one very wide provision which has come in related parties, transactions, and arm's length pricing, wherein it has again been said that related parties would mean two or more natural persons. Up to fourth degree of kinship is covered, and natural person which owns 50% or more in an entity or exercises directly or indirectly 50% control would be considered as related parties. So this is going to be a very wide coverage. However, just yesterday, a clarification has come that the documentation, though they need to follow transfer pricing rules and arm's length principle, the documentation requirement and filing requirement have been kept only for companies which are doing more than 200 million of annual turnover. So the transfer pricing rules and arm's length principles which have been defined are standard, which I think should be there in majority of the jurisdictions: comparable uncontrolled price method, resale price method, cost plus, transactional net margin, or transactional profit margin method. General anti-abuse rules also have been brought in. So any restructuring done with the intent to avoid or minimize your tax liabilities and implications, if it falls foul of the general anti-abuse rules, then government can take a contrary view and can charge interest, tax and penalties on that amount, which has been saved because of this restructuring. Tax compliances are going to be relatively not very complicated. Every company will need to register, and they'll have to file tax returns within 9 months of the end of tax period. And payments also happens within 9 months of the end of tax period. Self-assessment principle, however, the tax authority will have a right to do the assessment anytime within 7-year period. So all the financial records have to be maintained for 7-year period in minimum. Of course, it could go beyond if you receive a notice just before the end of 7-year period, then it becomes an open case till that matter is resolved. Even free zone persons which claim 0% tax benefit also will have to file, and they'll have to maintain audited financial statements also. And the first financial period for companies which have April to March as the financial year, for them, the first taxable period will be from 1st April 24 to March 25. And for Jan to December, it would be from 1st Jan 24 to December 24. This was on the corporate tax laws. Some of the other regulations I'll just glance through in another few minutes, and then I would like to come on to what are the opportunities for Indian chartered accountants and the fraternity in UAE. UAE has signed various double tax avoidance agreements, more than 100. So this would mean that now with corporate tax coming in, there is a possibility of double taxation happening, and that's why this double tax avoidance agreements could be utilized to structure the operations and take benefit legally of minimizing your tax liabilities. There are anti-bribery legislations also in place at public or private level, and if there are bribery allegations and there is a punishment which can be, fines, jail term, or both. Earlier, the way businesses used to operate in UAE was mostly that you needed to have UAE national as 51% shareholder and 49% was by the foreigners maximum in mainland. Of course, free zones, 100% ownership was allowed, but this I'm talking about the mainland outside the free zone area. However, UAE has mostly removed these requirements of having UAE national, and in majority of sectors, barring very few sectors which are reserved for UAE nationals, majority of sectors, 100% foreign ownership is permitted. And a single shareholder foreigner can also set up a company as a single person company. So this is one very welcome change which has happened. UAE also has started granting golden residency visas. Earlier, the visas, and now also for general public or you can say employees and all that, it's a 2 or 3 2-year visa in majority of cases. So every 2 years it has to be renewed. So this was little bit hesitation in people's mind who wanted to invest substantial amount in UAE, that if visa does not get renewed, then what happens? That's why this change is a very welcome change, where UAE authorities now grants golden residency visas, which is 10-year visa in majority of cases. In some cases, it is 5-year. The requirements are not very much onerous. It's either investment of 2 million in public investment fund or 2 million in a UAE company by way of capital or loans, or 2 million by way of a property that you hold in UAE, or even specialized talents like doctors, scientists, inventors, athletes. They are being granted golden residency visa. Unfortunately, chartered accountants are not covered under this particular category. However, they can opt for other categories. Outstanding high school or university students also are being granted because they want to retain the talent in UAE. And one very welcome change which has happened recently, that executives who holds graduation or degrees and who hold higher positions in the company and they draw a salary of 30,000 dirhams per month also are qualified to get 10-year residency visas. And once the main person, let's say the father gets a visa, then the wife, husband gets a visa, wife gets, and then their children also can get golden residency visa. So this was my presentation on the compliances, overview of the emerging compliances and regulations in UAE. I'll just stop sharing the slide. Of course, my presentation I will share with the WIRC team so they can circulate it after the session. I'll just stop sharing the slide and I'll just like to share a few thoughts on what are the opportunities which are available for Indian chartered accountants in UAE. I have been here in UAE for 30 years now in practice. And over the years, I've seen when I started, people used to ask me that in UAE, there are no taxes, there are no compliances. What do you do? And which was a fact. At that point in time, the scope was very limited. It was mainly accounting, auditing, consulting, and some sort of projections and feasibility studies and those type of things. However, over the years, and especially in last 5 to 6 years, if you see, this entire scenario has changed. So many corporate compliances, regulations have come in. And this means that the businesses also now needs to be on their toes. Earlier, businesses were very happy that they did not have to do any compliance. I would not say they are not happy now, but of course, they still need to do compliances, which means that they need professionals to carry out these compliances. So if a person is an expert on UAE corporate, in Indian taxes, for example, direct taxes, indirect taxes, even audit for that matter, there is a great amount of opportunity in UAE. Anti-money laundering is another area of operations for professions where there is good amount of opportunities. And believe me, one who has studied in India, and especially we chartered accountants, the kind of training, intensive training and knowledge that we are gaining by undergoing the ICA programs and passing through the exams, inter and P1, P2 and finals. The chartered accountant who has really done it in a proper manner has the knowledge, and I'm sure for them, learning the UAE corporate tax VAT is not going to be difficult, believe me, because if you see the UAE corporate tax law, is less than 60-70 pages with regulations, clarifications, guidance, notes, and all that, which are now coming in, or cabinet decisions all put together will not be more than 150-200 pages. And that also is not complicated. Similarly for VAT. So my submission is UAE is having great amount of opportunities. On top of it, one thing that I would like to highlight here, and where even ICI can proactively take it up with the Ministry of Commerce, Indian Ministry of Commerce. UAE and India has signed comprehensive economic partnership agreement. And it was, believe me, the first comprehensive economic partnership agreement which India signed and which UAE also signed. Under that comprehensive partnership agreement, as we call it as CEPA, CEPA, UAE and India has resolved to increase their trade and services multifold. Now, the target is going to be $100 billion from their current level. So there is a great amount of cooperation and close collaboration between the two governments. And at the ministerial level, our professional CA colleague and our Honorable Minister CA Piyush Goyal, he is in charge of these developments and discussions with the UAE authorities. And I'm sure if chartered accountancy services also can somehow come under the ambit of this CEPA, there is a preferential treatment that Indian CAs will get. And this, I believe, ICAI can really take it up at the government level. So this also presents a great opportunity, and businesses also which wants to do business in UAE, import, export between the two countries, they have preferential tariffs. So just to give you an example, if Indian jewelry manufacturer wants to export, a manufacturer in India of jewelry wants to export jewelry to UAE, earlier the rate was, custom duty was 5%. This has been made to 0%. You see, it's a huge difference that businesses can benefit from. And as a professional chartered accountants, many of our clients in India or even UAE are not aware of these benefits that they can take under UAE-India CEPA. So these are very many potential. Now one can really start with either setting up their own professional practice in audits, in consulting, tax, compliance, or any specialized fields like, let's say, CEPA or any other such activities. Or one can also get into job, because you can imagine that till now, when there were no regulations, you had a lot of compliance, you had no compliances. Companies did not require chartered accountants to that extent. They needed only for accounting and audit. Now you need chartered accountants, professionals for these services. And many of you would be aware of that. The presence, the strength of Indian chartered accountants in UAE is in excess of, I think 8 to 10,000, because only the Dubai chapter has more than 3,000 members. I'm sure there are many others who are not members of Dubai chapter of ICI. So that way there are huge amount of potential and possibilities, and I'll be very glad to support any of our professional friends and colleagues. If they want to have any guidance, they are free to call me and connect with me, and I'll be very glad to guide them on this matter. With that, I conclude my talk and presentation. Thank you very much. I believe if I would have added some value, and I'll be glad to answer any questions that anyone has. Thank you so much for giving me this opportunity to share my thoughts and knowledge. Thank you.
Great, sir. What a wonderful session we have with you. And really, you have highlighted all the emerging opportunities for our professional brothers. I don't think so. We have questions, sir. The candidates are asking just for PPT that we will share to all of us.
Sure.
So thank you, sir.
Thank you. So you can circulate it.
Yes. If anyone have questions, please write in the chat box so I can read for sir. Sir, we have one question from Dikshita Swami. What happened if parent is UAE and subsidiary is applicable? And what about subsidiary company tax applicability in India?
Okay, so as I understand is the parent entity is based in UAE and it has a subsidiary entity in India or any other place. UAE company, of course, will be taxed in UAE as per UAE corporate tax. The foreign subsidiary, if the management and control of that foreign subsidiary is not in UAE and it is being managed and controlled in India only, then foreign subsidiaries' profits will not be taxed in UAE unless foreign subsidiary distributes dividend. Now, dividend, when it gets distributed from India after paying Indian taxes, in UAE, if that foreign company is holding more than 5%, which because it's a subsidiary, it will be holding 51% plus. So, then again, the dividend or capital gains will be exempt. So main thing is control and management of foreign subsidiary is the key here, where it is residing.
One more questions we have from Prem Buddhadev. Deductible expenses, for deductible expenses, how to determine market value of remuneration provided?
This is a very subjective thing. It is going to be very challenging, I know. But again, see, one has to look at, let's say, for example, a company with a turnover of maybe, let's say, 100 million dirhams and it has 100 plus employees. What are similar companies paying probably? There are market sources like recruitment consultants and, HR consultants who will know generally that if you hire a CEO, for example, a professional CEO, how much would you pay? If you hire a professional director or managing director, how much would you pay? You ask a headhunter or a recruitment consultants and they'll give you some idea. That could become a benchmark. So it's a process of benchmarking, which will take some time.
Then again, one more question we have from Favin Gala. Is the distributions and service center category under the relevant activity leading to ESR a general category as it covers within ambit entire service category, or we have any exemption exceptions?
No exemptions or exceptions. Any nature of any category of services being rendered by UAE company to a foreign company, be it in the nature of professional service, trade services, or whatever, anything will get covered.
Sir, we have 3 questions on same query, that how can we get the audit license if we do not have any experience in UAE?
Yes, now this is going to be little challenging getting an audit license. Recently, the authorities in UAE have changed their requirements. So, you have to take a fellowship certificate from Accountant and Auditor Association in UAE. And for that, they have requirement that you need to equalize your graduation certificate. Unfortunately, they don't recognize ICAI, qualification. They say you give us accountancy equivalency of graduation. So you need to do that. Then you should have had experience of working in UAE audit firm for certain number of years. And you have to pass certain exams, 3 exams that they conduct. Based on that, then you can get an audit license. So yes, it is for a professional Indian chartered accountant to come and directly take an audit license might become little difficult unless you set up you work in some company as an associate or something, or work for some time and get an experience and then fulfill the other requirements.
So then one more question related to this only. What happens if I enter into a JV with a UAE enterprises?
For the audit part, you are saying audit license? Yes. Yeah, for the audit license, yes, that's what I said, that let's say there is an existing audit company. So you technically get employed with that company. And so you have an experience in UAE for a certain number of years. And that is one of the prerequisite and qualification that would be required, and apart from the other requirements.
Great, sir. I think you have addressed all the questions.
Thank you.
I request all the audience, if you have any more questions, that can be asked to another faculty we have with us, Mr. Prasad Bhonde, sir. So before going to the another session, I like to have hearty vote of thanks for such a wonderful session with Vipul, sir. Highly insightful and great in terms of knowledge sharing. So I request Sahil Jain, coordinator, to propose well-deserved vote of thanks for first session of this webinar. I think he's not available with us right now. So I request Treasurer Ketan Sayya, sir, is with me only to propose a well-deserved vote of thanks for such a great session we had with Vipul sir. Over to you, sir.
Thank you so much. In fact, due to some or other program, I was honestly not able to listen to the entire session. But as we discussed in the beginning, Vipul sir, looking forward for personally meeting you when you come to Mumbai. And I'm sure one or two feedbacks have come to me of the participant that the session was excellent. Sir, on behalf of Western India Regional Council, on all of us behalf, really thankful to you for sparing your valuable time for this seminar, and also looking forward for a positive association for entire Western India Regional Council. As you are from Western India Regional Council only, as we discussed, looking forward for some publication, also your inputs on publication on, opportunities in UAE, or maybe, taxation in UAE. Let's, do some mutually good work for the profession. Thank you so much, and request all of you to, acknowledge it with the round of applause to the sir.
Thank you so much. It is my pleasure and honor to address this gathering. Thank you.
Thank you, sir. Now moving forward to the next sessions, we have with us Mr. Prasad Bhonde sir as a faculty. I'd like to introduce him first. Prasad Bhonde sir is a competent fellow, company secretary and CMA certified professional with an experience of 20 or more years in the areas of internal, external audit, financial analysis and management, cost management and budgeting, tax and other compliances, project finance valuation, coordination and licensings. Currently designated as a director, audit and tax with Kothari auditors and accountants at Sharjah, UAE. He has gained experience in maintaining statutory books as per IFRS, performing tax to check and analyze financial information, compliances with all statutory and regulatory requirement, legal and governance aspect, etc. Proficiency in streamlining working procedure and formulating cost-effective solution for enhancing accounting operations. Also, he also possesses excellent communication, interpersonal and analytical and problem-solving skill with the ability to motivate others. With this brief introduction, I request Mr. Prasad Bhonde sir to take charge of our next session. Welcome, sir.
Thank you. Thank you, C.A. Saurabh. Thank you for the kind introduction. I hope I'm audible to all.
Yes, you are audible.
Yes.
Okay. So good afternoon in Dubai and good evening in India to all my professional brothers. I will just share my screen.
Saurabh, there are a lot of things in the Q&A also and chat box also.
So
maybe
sir, we have discussed with first
some
speaker
of them.
already, Vipul sir, and I request Prasad sir also to take all the questions if it is relevant to his presentation.
Sure, sure. So I'll be speaking briefly about the advantages of doing business in the UAE. Vipul sir has extensively covered the compliance requirement and also briefly covered the types of companies that can be incorporated in the UAE. So I will just deep dive into the company structure, the different types of companies, what are the advantages of doing business in UAE, and relevant topics. Before diving into the actual company structure and advantages, I'd just like to give you a brief about the UAE, United Arab Emirates, as we call them. So UAE basically is a federation which was formed in 1971 by merging of 7 kingdoms or states. Everybody knows Dubai. In fact, UAE is not such a popular term. In fact, Dubai is more popular. However, Dubai is not the capital of UAE. Abu Dhabi is the political capital of the UAE. Dubai is obviously the commercial capital. Apart from Abu Dhabi and Dubai, there are 4 other emirates, 5 other emirates. The official language of UAE is Arabic. However, in English and Hindi is widely used. UAE is, though an Islamic country, however, it is a multicultural society where different nationalities, different cultures, different religions are coexisting peacefully. In fact, to promote the tolerance in the UAE, the UAE government has appointed even a Minister of State for Tolerance. And they also have a national tolerance program in place. So they also have anti-discriminatory laws. They have anti-hatred laws, which are established in the UAE, so that UAE, as you know, that the UAE has 20% is the local population and 80% are expatriates. 28% out of the expatriates population, 28% are Indian nationals. So UAE quite is a multicultural, cosmopolitan type of a country, where people from different walks of life are staying peacefully and living their lives. UAE also believes in minimum government interference in business. So minimum government, maximum governance. UAE in brief, now as Vipul sir also had touched upon, 100% foreign ownership of companies permitted in majority of the sectors. So previously, 49% was to be held by a local entity or a local citizen. However, that requirement is no more there. So 100% foreign ownership is permitted. Property, foreigners can buy property in the UAE. Corporate tax 9% is coming from June 23, as you are all aware. Apart from corporate tax, there is no personal income tax in the UAE. There is no capital gain tax in the UAE. There is no restriction on foreign transfers, forex, there is no restriction. You can freely transfer money. Residence visas linked to property or company ownership. So once you buy a property, once you open a company, you are immediately entitled for a visa. Double taxation avoidance agreement, country has entered into this agreement with more than 100 countries. And UAE also is signatory to WEP's action plan, and the implementation is in process right now. This brief UAE statistics, I will not go into detail. Population is 10.24 million. The GDP growth is 3.5%. The oil and non-oil sector of GDP is around 72.3%. Total export and re-export is around USD 599 billion. And the inflation rate is around 3.4%. Little bit more about UAE. Current account surplus is around 11.6% of the GDP. In 2022, the FDI, foreign direct investment in UAE, was around 21 billion US dollars. Ease of doing business, UAE is ranking at 16. Ease of paying taxes rank is 5. There is, as you know, 9% corporate tax, no personal tax as of now. Oil and banking sector also have a corporate tax. They were having corporate tax previously before this corporate tax has come into picture. There is 5% custom duty and 5% VAT on majority of goods and services, except for those which are exempted or zero rated, as we discussed in the previous section. Other advantages are no trade barriers or quotas in the UAE. It is a trade hub, as the location of the UAE is such that it is easily accessible to entire Europe as well as entire Asia. It is located at a prominent, the location is prominent, so that easy accessibility of the entire region of Asia as well as Europe is available. The investment, there is stable investment grade. Dubai host city for Expo 2020. Dubai was, as you all know, was a host city for Expo 2020. In fact, after the Expo 2020 is over, the Expo 2020 site is being converted to an Expo city. The latest projects include Etihad railway projects. The UAE is getting connected with railways from its most southern Emirates of Abu Dhabi till the most northern Emirates of Ras Al Khaimah. Other jurisdiction in UAE. UAE has been a tax-free onshore jurisdiction till now, which is going to change from next month. UAE also now permits setting up of offshore company. Though tax-free, it is not like a typical offshore centers like since PE exists. Typical offshore centers like BVI or Mauritius or Seychelles. It is not like those jurisdictions, because here permanent establishment concept exists. It is not a very low cost jurisdiction due to requirement of having separate office premises. Yes, you will require separate office premises in the UAE. It has a well established legal system where there are numerous number of commercial laws and civil laws. There is a proper legal system in place where you have the different levels of court. The first level of court, then we have appeal and court. We have the Supreme Court as well. In DIFC, the UK common law is applicable. So if you are incorporating a company in DIFC, then the UK common law will be applicable. UAE also has an international arbitration center for dispute resolution. Other strengths and opportunities in this region. So this region has a population of around 1.3 billion. I think this is some mistake in this first line. Just ignore that. Combined regional GDP of 2.5 trillion. As you know, Dubai and Abu Dhabi having the latest modern infrastructure, and that infrastructure is developing day by day. And the government spending on infrastructure is also increasing day by day. The UAE's sovereign wealth fund is at 1.6 trillion, which Abu Dhabi is holding around 800 billion out of that. So huge sovereign wealth fund. UAE obviously has good infrastructure, communication, transport, connectivity. There is no foreign forex restrictions. There are very minimal labor regulations or no trade unions. Excellent security. UAE has the lowest crime rate in the entire world. 9% corporate tax and no personal income tax. Other opportunities include international trade and logistics. The UAE has the largest port, Jebel Ali port. UAE has recently developed a lot of manufacturing hubs for regional requirements. There are a lot of property investment opportunities in the UAE. Infrastructure development, especially in ports, airports, roads, railways, electricity, etc., is happening at a rapid pace. The service sector also is developing at a rapid pace. A lot of service sector industries, IT industries have established their offices in the UAE. Education sector also has improved immensely in the last 5 years, where you have offices of majority of the universities or colleges globally. They have their chapters, they have their branches in the UAE. Now we'll go to company structure in UAE. So this was about brief of the UAE, the geographic of UAE. Now, what are the different types of entities in the UAE? So basic entities can be classified into two: offshore and onshore entities. So offshore entity is an international company, usually used as a holding company for holding shares or investments globally or in UAE. Onshore entities again further can be bifurcated into two companies: free zone entities and mainland entities. Free zone entities can be of three types: free zone establishment, where it is a single owner company; free zone company, multiple owners; and a branch of a foreign company can also be established in the free zone. Same way, mainland companies, which are outside the free zones, they can be sole proprietorship, partnership, LLC companies, public joint stock companies, or a branch office of a foreign company or a free zone company also. This is a brief differences between the three type of companies: offshore companies, free zone entities, and mainland entities. As Vipul sir discussed, here the license is given for the activity which you wish to conduct. So you are not allowed to do any activity which is not licensed, which is not approved by the respective authority. So if you want to do an activity of, say, providing IT services, then you will have to get an IT consulting license. If you want to do an activity of buying and selling of goods, then you will have to get a license of general trading. So the license activity is mentioned in each and every license which the company has to follow. So majority free zones are permitting majority of the activities. Mainland authorities also are permitting a majority of the activities. Foreign ownership is permitted of free zone companies as well as offshore companies. In mainland companies also, they have started granting permission to foreign ownership 100% in majority of the sectors. Corporate shareholding is possible in all three types of companies. Corporate directors are possible in offshore companies, but in free zone and mainland, corporate directors are not allowed. Resident directors not required in offshore companies. In free zone, it depends on the free zone, what is the requirement. Registered agents are required in offshore, but not applicable in the other two types. Value-added tax, VAT is applicable on in case of free zone entities and mainland entities, depending on certain conditions, how you are transacting, with whom you are transacting. Corporate tax is applicable in all the three types of entities, 9%, subject to terms and conditions. UBO, ESR, AML is applicable again to all three types of companies. As far as audit is concerned, not mandatory for offshore companies. Again, for free zone, it depends on which free zone you are in, depends on that, whether the authority is requiring. For mainland, yes, it is applicable, audit is required. Tax resident, an offshore company cannot be termed as a tax resident of UAE. Free zone entity, yes, it can be considered subject to certain conditions, and mainland also, it can be considered as a tax resident of UAE subject to certain conditions. Can sponsor UAE residence visa for shareholder director? No, in offshore you cannot sponsor, but in free zone and mainland you can sponsor. As far as cost is concerned, offshore is the most cost effective, free zone is relatively cost effective, and mainland is a little expensive. So basically determining where the company is to be incorporated depends on your requirement. It depends on the activity which you are willing to undertake. It determines obviously on the costing factor. It determines on the premises you require to operate your business, whether you require just an office or would you require a warehouse. It also depends on the number of visas you would require, the number of employees you would wish to employ in the UAE. So all these factors have to be taken into consideration when deciding for a jurisdiction for incorporating a company. So we'll go to we'll do a brief of each type of entity. So offshore companies, resident directors are not required. You don't require directors to be present in the UAE. Corporate directors permitted in certain offshore authorities. Beneficiary identity to be declared, as we discussed earlier, UBO, ultimate beneficial owner declaration is required, but it is not on public record. It is not visible to all. It is only with the authority. For offshore companies, there is no office as such, no business, no employees in the UAE. There is no corporate or personal income tax or no direct tax, zero tax, obviously subject to certain conditions. No restriction on movement of capital and profits. You can freely move your capital and profits out of or in UAE. There is no requirement for meetings, no account filing, not tax resident, so no, and not entitled to double taxation benefits. So offshore company is not a tax resident of UAE. So double taxation avoidance agreement benefits will not be available, and it is quite cost effective. These are the characteristics of an offshore company. Then free zone entities, as we discussed, there are 4 types of free zone. You can incorporate 4 types of free zone entities inside a free zone. A free zone establishment, which is a single owner company, a free zone company, which is multiple owners, branch of a foreign company, and branch of a local company as well. Characteristics are, as we discussed, 100% foreign ownership, tax holiday from 15 to 50 years. Now, each free zone is giving you a guarantee that even if the UAE implements any form of taxation, the free zone companies will be entitled for a tax holiday for 15 to 50 years. However, that does come with certain conditions. Again, there is no restriction of moving of capital and profits. It is a limited liability company. Local directors are not mandatory. Directors are eligible for UAE residence visa. They can apply for visa and get a visa. Free zone companies can be owned by a foreign overseas company. So foreign companies can open their subsidiaries in the free zone. They can trade with companies outside the free zone as well. And they are entitled to benefit under a double taxation avoidance agreement since they are considered as tax resident of UAE. And the permanent establishment are in the UAE. There are different types of free zones. UAE has around 45 free zones. There are different 45 free zones in the UAE. But these are the major free zones in the UAE. Jebel Ali free zone. There are over 7,000 companies as of now in Jebel Ali free zone. Dubai Airport free zone. We have DMCC, DIFC, the Dubai Silicon Oasis, DSO, Sharjah Airport free zone, Amaria free zone. These are different types of free zones in the UAE. Apart from that, there are many other free zones in the UAE. There are almost 80,000 companies in all different free zones. Many of the Fortune 500 companies have their offices in the free zones for running their business in this region. Not just holding company, not paper companies, but active operating companies. So free zones, usually we think that they are just paper companies where only movement of document happens, but that is not the case. These are actual active companies doing businesses with UAE companies or overseas business. You can also set up holding company or single family office in the UAE in the free zones. Mainland company again can be of 4 types: sole proprietorship, limited LLCs, public companies, or branch of a foreign company. As we discussed, 100% foreign ownership is permitted in selected sectors, or if it is not permitted, then only 49% is for the expatriate. UAE national may be a silent partner. Profit sharing ratio can be other than capital. So if it is a restricted sector where you are not allowed 100% ownership, then 49 capital ratio can be 51-49. However, the profit sharing ratio may be 10 and 90 also, depending on the approval of the authority. Then in such a case, then the expat or the non-local shareholder can also charge management fees as a percent of profit and turnover. They can also charge interest on any loan, etc., given by the foreign partner to the company. Again, there is no restriction on profit or capital movement. Corporate tax will be applicable at 9%. There are only 2 direct taxes: customs and VAT. Excise only in case of certain commodities. Shareholder can be a corporate entity, and audit requirement for limited companies and branch office is there. So audit is required for mainland entities. So in brief, whatever you have discussed, what are the basic advantages of setting up in the UAE? As we discussed, UAE, the location, it is located between Asia, Africa, and European continent. So the location of the UAE, if you see on the map, it is exactly in the center of these 3 continents. So it has easy access to all these 3 continents, and that's why UAE has become a trading and a commercial hub for this entire Gulf region. As you know, as we discussed, UAE has a substantial sovereign wealth fund, which is estimated at around 3 trillion. Time zone advantage, obviously, the time zone advantage we have is that we are working during daylight of India, as well as Europe, as well as Africa. UAE and Gulf regions are one of the largest importers of various commodities. UAE and Gulf countries are one of the largest importers of machineries, parts, medicines, technology, consumables. And UAE and regions are the largest exporters of oil and natural gas. Obviously, UAE has the largest amount of oil reserves and natural gas resources. So we are the largest exporter of same. Having said that, UAE is also doing a lot of economic diversification. They are not just relying on the oil and natural gas resources. They are going into other sectors such as construction, e-commerce, service sector, IT sector. A lot of economic diversification is happening from the government's point of view as well. As we discussed, 100% foreign ownership is allowed in free zone as well as in mainland companies, majority of the sector. No restriction of movement in capital or profits. Though corporate tax is coming, the corporate tax is the lowest globally. If I'm not wrong, I think Hungary is the only country which has a 9% corporate tax rate, similar to of UAE. Otherwise, UAE has one of the lowest corporate tax rates globally. Also, if your company is in free zone and you satisfy or comply with certain conditions, you may be eligible for a 0% tax rate also. Investment possible via a mix of equity and loan. So you don't need to invest your entire amount in share capital. You can have a mix of your investment in equity as well as loan. For professionals, as Vipul sir discussed, there is a wide scope because of new laws coming in, additional regulations which the UAE is bringing in to strengthen its business environment. So the professionals do have a wider scope now in the UAE. As Vipul sir discussed again, India and UAE have signed a comprehensive economic partnership agreement. In that, UAE can import goods manufactured in India at a lower tariff or even at a 0% custom duty. So that is one of the advantage. UAE has a very good golden visa program, long-term residency program, as we discussed in the previous discussion. UAE is now a regulated economy. With introduction of corporate tax, would be widely recognized in global financial markets. Previously, 5-6 years down the line, UAE was not a preferred destination because it was treated as a tax haven. But now, because of all these regulations coming in, corporate tax coming in, and the anti-money laundering regulations, UAE as a market is treated as a favorable global financial market. UAE, as you all know, has highly developed and modern infrastructure, which is in line with all big Western countries. UAE entities can be used as a global holding company for international operations. So if you have international businesses, then you can set up a company in the UAE, make it as a holding company for all your business operations, and take the advantage of double taxation avoidance agreement. So you can expand your global footprint. So I think that is it from my side. I hope I have given you some valuable insight into the brief different types of companies in the UAE. If you have any questions or any doubts, please feel free to ask. Thank you. Thank you very much. Yes, I see some questions in the chat box. I would be sharing my presentation as well. And then that can be circulated to the members.
Hello.
Hello. Yes, I think we can answer the questions in the chat.
Yes.
So I think the first one is concept of virtual work permit for professionals in Dubai. Yeah. So see, there are for work permit, what happens is, in case anyone wants to have a work permit in UAE, they need to have a company sponsoring the work permit. So either an independent company sponsors, or you set up a company in one of the free zones, which could be as a small, free zone establishment with a virtual office and or a shared workspace. And then once that company is set up, you can take work permit. Or else you can also get a freelancer permit, which is permitted for certain type of activities where you don't set up a company, you just work as a proprietor and you get a work permit. So I think these are two options.
There is one question. Our free zone is not eligible for VAT registration, but bankers are asking for VAT registration. If we apply, what are consequences may happen? The VAT registration, we also have faced certain questions from our clients that the company is not either crossing the threshold limit, or the company is in free zone and doing entire export business. So they are not actually eligible for VAT registration. So even if you apply for VAT registration, you will not be granted any VAT registration. So basically, you will have to educate the banker. You will have to tell the client that VAT registration as per the law is not required. And however, if you want, there is an option of also getting an exemption from VAT. If you are not a free zone company, but doing totally zero rated supply or zero rated business, where the VAT is zero rated, you can apply for an exemption from VAT also. And then once you get an exemption, that you can submit to your banker stating that we have got exemption from VAT.
One more thing that they can do is apply for the VAT registration. If banker is insisting, let it get rejected and show it to the banker, which is more of a proof that, you're not entitled to because you do not qualify. Best place to open jewelry business, office, free zone or mainland. I think, the primary difference between whether you should set up in free zone or mainland will depend on your nature of business. Are you going to do local business in terms of selling to local market, to the end consumer, or B2B? And if you are going to do that in the local market, then you will need a mainland company rather than a free zone, because then free zone will not serve any purpose. Anyway, in the mainland also, you get 100% ownership now for trading companies. However, if you do only export business, for example, or selling within the free zone, then you can go for a free zone company.
There was one more thing, Vipul bhai, here in the chat box. Someone says, Shitish Shah, how can we get audit license if we do not have any experience in UAE? I don't know whether you answered that earlier.
Yeah, so what happens, I covered it, but I can repeat it again, saying that, in audit license, the requirement is, one, you have to get fellowship from Accountant and Auditor Association of UAE. Another requirement is you should have experience of audit in UAE. So what happens is, someone who comes from India directly, he may not be able to get a license. You'll have to probably tie up with some existing company, get on their visa, basically you are part of that particular local company and be on that for maybe, 3 years plus, and then you will be entitled to. Apart from, of course, meeting the fellowship requirements, which involves, again, getting your exams done in UAE and all that.
There was one other thing also. How can we learn the corporate tax and other taxes of UAE? And
So you can, So basically, they have this government website where the entire corporate tax law and material usually is there. That is the FTA, Federal Tax Authority website. So that is one place where you can get the access to the latest clarifications or guidelines or their act also. You can get it from that website.
There are a lot more in the chat box also. Maybe if you want, we can cover a couple of them. I can read them out.
Sure, sure.
So
Sure.
one is like, I don't know whether you already covered, so I am reading it. If you already covered, no worries. Any idea regarding change in procedure of providing TRC by UAE authorities required for Indian tax perspective? Now they are providing for past 1 year.
Yes, there has been a change. UAE has come out with changes in the tax residency rules. Earlier, the requirement was stay of 183 days in UAE, and they were issuing prospective for the ongoing year or for, let's say current financial year. However, now they generally give for the period that you have stayed. But one change which has come is instead of 183 days, they have also reduced that to 90 days, provided additional conditions are fulfilled. And those additional conditions are you have your place of economic interest or financial interest in UAE, and you have a place of residence in UAE. So if you can prove these two things, you can still get a TRC with 90 days of stay in UAE. But I'm not sure whether in India under DTA you will be able to use, because I think DTA requires 183 days stay in a particular country. So I don't know. I mean, this is something that you'll have to explore. But yes, UAE you can get.
Thank you, Vipul bhai. There is one thing which is general, maybe you may have some other view. So someone is saying like opening bank account in UAE is very cumbersome. Banks are not customer friendly. I don't know.
It is a fact. It is definitely a challenge nowadays because of the compliance and anti-money laundering compliance matters. They have become very stringent. So they do complete background check of the shareholders, promoters, and their company, and also the activity they are planning to carry out. And as long as no hits are there in terms of negative reports or anything, bank account will get opened. It could take time. It could take sometimes 3 to 4 weeks also or more, depending on how complex the structure is.
Thank you. There is one more. I'll take 2-3 more and then maybe we can stop. So
Sure.
Someone is Vipul Zaveri is asking, we fail to start any business in free zone company. Can we apply strike off?
Yeah, they can, definitely they can. I mean, it's not strike off as such. You have to formally liquidate the company. So you have to go through the process of canceling visas, submitting them all the other requirements, including the liquidation report.
Okay. And there is 1 year which is generic. Maybe you can later on also do it, but I saw it in 2 places. Can you list down services Indian CA can perform by opening a branch in UAE?
See, as we covered whenever you set up a company in UAE, you have to obtain specific permission for what activity you are going to carry out. So today, when I'm practicing, if I need to do audit, I need to have auditing as activity in my license. If I need to provide bookkeeping, accounting, I need to have that activity in my license. Tax compliance, separate activity. So depending on what activities you take and what activities granted to you based on the authorities' regulation, you can carry out. Only challenges in getting audit license. Yes, it is a process, and it can take some time, but getting a license and setting up a company for carrying out bookkeeping, accounting, or tax and compliances or management consulting is not a problem. That you can do it in any free zone also, and you can render the service in free zone or mainland generally.
Okay. Thank you. Maybe one more. How freelancer can apply for work permit if required, and what are the platform to connect as freelancer?
See, some of the free zones are offering freelancer permits. So you have to go through those free zones, get a freelancer permit, and then they have packages that you get freelancer with 0 visa package, which is cheapest. If you want 1 visa quota, then it is little expensive. If you want more quota, then it is little more expensive. So It's just like setting up a company. You do that process. It's only that your company is not registered separately. They call it as a freelancer license.
Okay. Vipul bhai, I am trying to utilize, since we have 2-3 more minutes, if you're okay, I'll take 2 more
I'm
questions.
okay. Perfectly okay.
Okay.
No problem.
So is sponsorship mandatory for audit license in UAE? Someone, Satish.
Yes, I mean, it's not sponsorship as such. They say now a UAE national who has an audit license has to be a partner in the audit company, holding 25% stake.
Okay. Thank you for that. And one other, Akshay Ramaswamy is asking, is transfer pricing norms applicable to transactions between parent and subsidiary in case of corporate tax grouping?
If parent and subsidiary are part of tax group, then they don't have to worry about it, because then transfer pricing is not applicable. They'll file after netting of the intercompany transactions in any case.
Okay. I think I have tried to cover quite a few. Gratefully, Prasad, presentation will be shared. Parent company in branch, concept of virtual work permit for professionals in Dubai, season company. So, and some again are saying that excellent session and various other things. Maybe one is again repeating that what kind of license or CA require for providing taxation consultancy service and not assurance service. Maybe the last one.
So there are activities like bookkeeping, accounting, or tax and tax consultant activity also is there. So they can go for that.
Good. So thank you, Vipul bhai and Mr. Prasad. I think very good, well covered on various aspects of it. I'll just check with Saurabh, Ajmera, or Sahil. Sahil, you want to carry out a vote of thanks for the session?
Yes, sir. Sure.
Yes, Sahil, over to you.
So there are no words for today's session. Both the faculties, Vipul Kothari sir and Prasad Bhonde sir, has deliberated a well session on it, and I request the chairman and secretary to have a further series on it as the new pillars came for UAE taxation, and it will be a great area for the new practitioners also. As UAE taxation is just a part is come. It is the starting of the UAE taxation. Meanwhile, they will cover more things, and Prasad Bhonde sir has covered the tremendous session on the opportunities for UAE, and I would like to request all of you, please have a big round of applause for both the faculties at your places. It is great, and I would like to request all the office bearers to have a seminar on it when both the faculties are available in India. And just to mention one point, our institute has come up with the background material on UAE certificate course. A material has been introduced by our institute of 416 pages. Whoever practicing in that area or try to practice in the area, kindly refer to that material. It is a very good material published by the Institute of Chartered Accountants of India, and we feel proud for it that our institute is nowhere back here, matching shoulder to shoulder on all global opportunities. Thank you both the faculties. Thank you very much, sir.
Thank you
Thank you,
again.
Sahil. Yes, much deserved vote of thanks. And Vipul bhai and Prasad ji, we will once we get your the PPT, then we will upload on WRC website so that members can download. Many people have asked for that, so we will do that. And maybe in your presentation on the last slide, if you can give your mail ID and contact detail also, because still there are so many questions coming. Maybe they can write to you on your mail, and whenever you get some free time, you can respond back to them. It will be a big service to all the members.
Sure. Will be my pleasure. Will be our pleasure. Thank you so much.
Sure. Okay. So with that,
thank you.
Yes, thank you very much.
Thank you very much,
Thank you
sir.
for your time. Yeah, good session. And thanks to all the participants. I think really thank you for all the questions. Thank you very much.
Thank you.
Thank you.
Yeah.
Mishra ji. Recording.